How can you use business credit to really supercharge your investments? And I got to say, the stuff you send over, I'm already hooked. Multiple properties in a year, way beyond what I could do with my personal savings.
Well, yeah, that's leverage for you.
Okay, love it. Unlock the secrets, right?
It really is like having a secret weapon. You can magnify your investing potential.
I am all about secret weapons, but I got to be honest, leverage kind of feels a little abstract. I'm knee-deep in real estate deals here. Can you ground this for me?
Okay, picture this. You're trying to move a massive boulder you could push with all your might, right? Or you could use a lever. Simple tool, amplify your effort.
Okay.
Business credit, that's your lever in real estate. Let's say you need a $20,000 down payment. Instead of wiping out your savings, you could use a business credit card. One with a 0% introductory APR offer.
So you're saying, like, I get a year-long interest-free loan, essentially, to make that down payment. But what happens after that intro period?
Well, that's where a solid exit strategy comes in.
Oh, okay.
You could refinance, sell it for a profit, maybe even use that rental income to cover the balance. Point is, have a plan before you even touch the credit.
That makes a lot of sense. But, some investors might be thinking, why even bother? Why not I just use my own money?
I get it, I do, but it's all about maximizing your potential, right? When you use business credit strategically, you're freeing up your personal funds.
Oh, okay.
You can invest in other opportunities. It's like a ripple effect of growth across your entire portfolio. Plus, remember building that separate credit history.
Speaking of that separation, why is that so important? Business and personal credit. I know it's got to do with liability, but can you, spell it out for me?
Think of it as building two separate financial identities.
Oh,
Your business credit history, it's like your business resume. You're showing lenders, hey, I'm financially responsible.
okay.
And your personal credit, it's safe, untouched.
Gotcha.
So not only are you protecting your assets, but you're opening doors to those higher credit limits and better lending terms.
It's like a superhero alter ego, but for business.
I like that. And every superhero needs a good origin story. You need a strong foundation for your business to really attract those lenders.
Okay, so we've got the leverage thing down and keeping things separate. Let's talk about that foundation.
It all starts with the basics. You've got to formally register your business, LLC, or corporation. That's key for legal protection. Your business is its own entity in the eyes of the law and in the eyes of those lenders.
So that's where things like an EIN come in and a business bank account, right?
You got it. EIN, it's like a social security number for your business. Got to have it to operate legally, financially. And the bank account, it's not just about staying organized. It's showing lenders you're serious. This business is a separate entity.
So it's all about, building trust, credibility.
Exactly. And these days, that means online, too. A website. It's not a maybe anymore. It's a must-have. Got to look professional, especially if you want those lenders to trust you.
So, it's your online storefront. You're showing you're legit.
Exactly. It's all about transparency, looking professional.
Right, this is making sense. So we got the why of business credit. We've got the how to set things up. But I want to get to the good stuff.
Let's do it.
How are investors actually putting this business credit to work? What are the strategies?
One of the big ones is using those business credit cards for down payments, especially those with the 0% introductory APR. Let's say you find a property, needs a $10,000 down payment. Instead of rating your savings, use that business credit card. You've got time to get some rental income or financing in place before that interest kicks in.
Brilliant. Built-in cushion, right? What other strategies did the source mention?
Renovations, repairs, that's another one.
Oh, yeah, of course.
Unexpected expenses pop up and a business line of credit, it's a lifesaver. Imagine you're flipping a property, inspection reveals a major plumbing issue, boom. You need funds fast. Business credit line can get you that, keeps your project moving without you having to drain your personal funds.
So it's about having the money when you need it without messing up your own cash flow.
Exactly. And don't forget about working capital, property management fees, marketing, legal stuff. Business credit gives you that flexibility. No need to dip into your own reserves.
So it's like a multi-purpose tool for real estate investors. But what about those people who, they're a little hesitant to take on debt? What would you say to them?
Debt can be a powerful tool if you use it responsibly.
Okay.
Understand the terms, have a plan to pay it back, and use it strategically. You want to grow, not just cover your daily expenses.
So it's not about being scared of debt. It's about respecting it, using it wisely. I like that.
Exactly. And like any powerful tool, you need to know its potential and its limitations.
Okay, so that brings us perfectly to our next segment where we'll really dig into building business credit, starting with vendor credit. Stay tuned. Welcome back, everybody. Ready to level up that business credit? Last time we talked all about leverage, building that solid foundation. Now let's get into how you actually build business credit step by step.
It's like building a skyscraper, right? You've got that foundation. Now we're adding those steel beams, the concrete, layer by layer, building up to something impressive.
I love the analogy. And I remember the source we're looking at mentioned something called vendor credit, like as a first step. Can you break that down? What is it and why is it so important?
Vendor credit, it's basically a line of credit a supplier gives you, a vendor.
Okay.
It's like a buy now, pay later kind of deal. You buy goods, services, you pay them back over time. But, and here's the key, you want to work with vendors who report those payments to the credit bureaus.
So not all vendors are created equal when it comes to building that credit, huh? How do I even know if they report to the bureaus?
Well, you can do a few things. Some vendors will straight up tell you on their site or in their terms and conditions that they report. There are also resources online that list vendors who do. And of course, good old networking. Ask other investors, see who they've had good experiences with.
Yeah, tap into that real estate wisdom, right? Always a smart move. Okay, so I found a vendor who reports. What happens next?
Consistency is key here. You got to pay those invoices on time, every time, no exceptions.
Gotcha.
They're basically vouching for you to those credit bureaus, showing you're good for it.
So even those like boring invoices and payments, they're actually powerful in the credit world.
Absolutely. And it's not just about paying on time either. Build a good relationship with those vendors, communicate, address issues quickly, show them you value their business.
So they're like allies in this whole credit building journey.
Exactly. And as you build up that positive payment history, you're ready for the next step, business credit cards.
Okay, now we're talking, right? Business credit cards. That opens up a lot of doors, doesn't it?
It does. Higher limits, rewards programs, and a way easier way to keep track of your expenses. But when you're just starting out, you might want to go with a secured card first.
Secured cards. Like I've heard of those for personal credit, but how does that work for a business?
Same idea. You put down a cash deposit, basically acts as collateral.
Okay.
Usually matches your credit limit. So $5,000 deposit, you get a $5,000 limit. Less risky for a lender. And those on-time payments you make, they get reported, building up your creditworthiness.
So it's like a training ground for using credit responsibly.
You got it. And as you show, you can handle it. Keeping that utilization low, your score goes up, and you can get those unsecured cards with higher limits, better perks.
So those unsecured cards, that's what the pros are using, right? To really maximize their credit.
That's right. More flexibility, travel rewards, cash back, sometimes even 0% intro APR periods. But the golden rule stays the same. Whether it's secured or unsecured, pay more than the minimum.
I've heard that for personal credit, but why is it so important for business credit?
Minimum payments, they keep you in debt longer, costing you more in interest, and can actually hurt your score.
Oh, okay.
You got to show those lenders you're serious about managing credit well.
It's all about building that reputation, right?
You got it. All right, so we've tackled vendor credit. We're using those cards strategically. What's the next step up?
Yeah, what's next?
Credit lines and business sales. These are the tools that can really get you moving, fuel those real estate ambitions. We're going from the minors to the majors here.
Now you're talking. Big leagues. Tell me more.
A business line of credit. Think of it like this. You've got revolving access to funds up to your credit limit. Borrow what you need when you need it. Only pay interest on what you actually use.
So it's like a safety net, but you can actually use it to grow.
Exactly. And as your business grows and your credit worthiness improves, you can qualify for more. Bigger credit lines, bigger deals.
That's where those 6-7-figure funding options come in, right? Taking your real estate portfolio to a whole new level.
That's it. And then there are business loans, usually for specific projects, investments, more in-depth process to get them, but they can get you a lot of capital.
So not just covering a down payment or some repairs anymore. We're talking funding whole projects.
Exactly. And as you grow, you might even look into SBA loans. Backed by the Small Business Administration, they can offer better terms, lower interest rates, a good option for a lot of investors.
This is so much great info. In just 2 segments, we've gone from credit rookies to seasoned pros.
It's all about knowing your tools and using them the right way to hit your goals. But just like anything financial, there are things you got to watch out for.
Right. Pitfalls.
Exactly.
Okay, well, that's a perfect transition to our next segment where we'll get into those pitfalls and all those exciting fintech financing options. Stay tuned. Okay, welcome back, everyone, for the last part of our business credit deep dive. We've covered so much, building that foundation, vendor credit, using those business credit cards, even got into those big league funding options like credit lines and loans. But before we wrap things up, got to talk about the downsides, the stuff that can trip you up even if you know what you're doing.
It's like you're navigating a forest, right? You got to know the right paths to take. Avoid those wrong turns.
Love that. Okay, so let's talk about those wrong turns, those common mistakes with business credit. What are we watching out for?
One of the big ones, mixing personal and business expenses. I know, we talked about it before.
Yeah.
But it's so important.
It's easy to see how it could happen, especially in the heat of the moment, you know?
Exactly. But that separation, it's not just about your personal credit score. It's about keeping your business finances clean, making sure you're playing by the rules tax-wise.
So, no using the business card for family vacations, even if it's tempting.
Nope. No way. And while we're talking about keeping things clear, record keeping, maybe not the most exciting part, but essential.
I'll be honest, not my favorite thing either, but I'm listening. Why is it so important for business credit?
Think of your records like a roadmap.
Okay?
It helps you track everything, expenses, cash flow, see where you can improve, make those big investment decisions with confidence. And when tax season rolls around, you'd be glad you did it.
All right, no more shoeboxes full of receipts. I got it.
Good. Now, another one to watch out for is jumping into a deal without an exit strategy.
Oh yeah, that sounds like a recipe for trouble.
It can be. Before you use any business credit, ask yourself, how am I paying this back? Refinancing, selling for a profit, using that rental income. You got to have a plan.
Like a backup plan? Maybe even a backup plan to the backup plan.
Right. Real estate can be unpredictable. And don't forget credit utilization. That's a big one. Affects your score a lot.
Right, keeping it below 30%, but I'm still a little, I don't totally get why that number is so important.
Okay, so imagine you're maxing out your cards every month.
Yeah.
What does that tell lenders? Maybe you're spending more than you have. Maybe you're relying on credit too much.
Ah, okay. Makes you look risky.
Right. They're going to hesitate to give you more.
So it's not just paying on time, it's showing them I'm using credit responsibly, not to, like, survive, right?
Exactly. It's about discipline, managing your money well.
Okay, I get it now. So we've got separation of expenses, good record keeping, exit strategies, watching that credit utilization. Anything else we got to be careful about?
Don't put all your eggs in one basket, you know what I mean?
Yeah.
Relying on just one funding source can be risky, especially in real estate. Things change fast.
So diversify your funding options, but beyond the usual banks, what else is out there?
That's a great question, and it brings us to fintech, financial technology. It's changing everything about how we access and manage money.
Fintech, yeah.
We've got online lenders, crowdfunding, peer-to-peer lending, even revenue-based financing.
Wow, that's a lot. So the whole business credit world is, like, really changing fast. What should investors keep in mind with all these new options?
Understand what each one offers. Pick what works best for you for your goals. Online lenders, they can be faster, more flexible with who they approve, but the interest rates might be higher.
So fast, but maybe more expensive.
Right. Then you've got crowdfunding. If you've got a project that's a little outside the box, doesn't fit with the usual lenders, this can be good, but watch out for the piece.
Okay, yeah. What about peer-to-peer lending? I've heard that, but I don't really know how it works.
Basically, you're cutting out the middleman, the bank. You're borrowing directly from other investors.
Interesting.
You can sometimes get lower interest rates, but do your homework, understand the risks.
So it's more personal, but you got to be careful.
Exactly. And then there's revenue-based financing. Getting popular now, especially for businesses where the income changes a lot. Instead of paying the same amount every month, you pay based on how much you're making.
Oh, that's interesting. Makes sense for some businesses.
Yeah. So the whole business credit scene, it's getting more diverse, more dynamic, lots of possibilities.
I like it. More options.
But with more options comes more responsibility. Approach them carefully, like you would any financial decision.
Right. Read everything, understand the terms. Don't be afraid to ask if you're not sure about something.
Exactly. And if you need help, talk to the experts, financial advisors, legal folks. Make sure you're making smart decisions, ones that fit your whole investment strategy.
This has been amazing. We've gone from leverage to building credit to all this new fintech stuff. I bet our listeners are feeling pretty knowledgeable and ready to take action.
I hope so. It's been great talking about all this with you. Remember, knowledge is power, especially when it comes to real estate.
Absolutely. So that wraps up our deep dive into business credit. Until next time, happy investing, everyone. 6CI.